Hi, my name is Joan Rogliano. I've been a realtor for about 30 years and was recently featured on the Today Show as a real estate divorce specialist. For the last 10 years, I've been specializing in helping families who are going through the transitions of divorce decide what to do with a marital home. And it's usually a really big decision because for most families, it's the largest financial asset that they have. And it's also very emotional. So over the years, I found that one party or the other does want to keep the house, which is great, but I've also realized that frequently the party who's keeping the house isn't fully aware that there could be a capital gains tax due that they would be responsible for when the home is sold. So I want to touch briefly on the exemption rule because it's really important when approaching this decision. If a couple sells a marital home, they are entitled to a $500,000 exemption. That is, unless there's been more than a $500,000 appreciation on the property, there shouldn't be any capital gains tax due. Well, when a single person sells the marital home, the person keeping the home following the divorce, that exemption drops to $250,000. So when the home is sold, the person who kept the home, assuming they're still single, will be only entitled to a $250,000 exemption. So please consult with your tax advisor and your financial planner, your realtor, to find out what homes are doing in your area as far as appreciation is concerned before making the decision to keep the house, keeping an eye on this possible capital gains issue. There are two other rules beside the exemption rule when talking about capital gains. The next is the use rule, and then there's also an ownership rule. So we're going to be covering those two items in our next videos, so please stay tuned.